I was motivated to make this video basically because I recently went to a summit in Washington, D.C., put on by Goldman Sachs. I am a part of a group of people, small business owners, that Goldman Sachs over the last 10 years has trained 17,000 small businesses on how to grow their business. So I finished the course last November, and what they taught me was the first thing you do is access capital. Whether you have it or you need to borrow it or you get a small business loan, you access capital. And with that capital, you implement a growth plan. And what I realized was that's exactly how large companies grow as well. When they see a growth opportunity, they access capital, they spend money. Most of the time, they also hire more people, build their staff so that they can implement. Now, with AI, that's a little bit different. But just and what I realized, that's exactly what's happening in this AI build out. Amazon, Google, Meta, and Tesla are accessing their own capital in most cases and going out and spending it to create this growth opportunity by building data centers to access AI, artificial intelligence, large language platforms, so that once those data centers are built and those large language platforms are built, they can turn the $7 trillion that they're collectively spending into revenues, which they then believe can turn into earnings and profits. So if that's what a small company does, and that's what a big company does, then what I need to find is who are the people that are supporting the big companies, the Amazons, the Googles, the Apples, the Microsofts, who are supporting them and providing the tools and the equipment to make this access to large language platforms and data centers available so they can turn their $7 trillion into $700 trillion. Who are assisting them in doing that? So it becomes something of a scavenger hunt, okay? I did some research and I found that in the last year, 373 companies have had growth in their stock price in excess of 100% in the year, all the way up to one of them that had a growth of 9,000% in 1 year. So if they're there, and then I went and looked and said, is this an anomaly because of AI? No, it happens every year. So the trick becomes, how do you find them? So what I did was I took Goldman Sachs's model of a growth company and I created a prompt inside of ChatGPT. I built two AI agents and said, okay, Bard, he's the AI, he's the researcher, go find me companies whose revenues are growing in excess of 20% per year the last 3 years and projected to continue on that trajectory for the next 3 years. And then I don't really care if they're profitable, but if their losses are coming down, that tells me that the money that they're spending to take advantage of this growth opportunity is generating revenues, which then I also then go and look at their gross margins and their operating margins. And if the gross margins are going up, I don't worry a whole lot about the operating margins initially, but they need to start coming up as well. We now have a growth company. So I put this all in and give it to Samantha. And Samantha is my research agent. And I have built her over the last year so that she knows what a growth company is, know what a solvent company is, knows what does both quantitative and qualitative analysis, and then I give her access to what Wall Street believes the price of these stocks are going to be, and teach her what's a PE ratio, what's a PEG ratio, and how can they project what the price will be over the next 3 years. Because as a goal for my company, Best of Us Investors, we want to buy stocks whose price is going to grow at least 100% over the next 3 years. Now, if you'll look at my what we've done so far, since I initiated this, since I gave Samantha and Bard and myself $766,000 to use this plan, that was on May 1st. Between then and November the 1st, it's become $1,550,000, which represents a 124% gain on our investment. Now, the other thing that then comes in is, when do you get out? We had a situation just yesterday where one of our stocks, who has been up 600% over the last 12 months, had a 2-day downturn in excess of 20%. So what I do is then go to Samantha, feed the earnings report that was issued last night, and say, okay, is this something that is signaling a sell? Is this something that is signaling it was a one-off event and it's a buy? Or do we continue to hold? And so we make decisions accordingly, and that's how you grow a portfolio, and you outperform the indices. And that's the goal. If you go to a financial advisor, he's going to tell you, we just want to outperform the S&P 500. That was good enough back when I was a financial advisor, when I didn't have access to all this data. And when I say data, I mean I have access to all 6,000, 7,000 stocks, financial statements, balance sheets, cash flow statements, all the reports that they file with the SEC, and then most important, most current, the manuscript from their quarterly report, which also not only tells what they've done in the last quarter, but what they project they're going to do in the future. Then I also have access to the knowledge of how big is their TAM? How big is their total addressable market? Is it big enough that they can meet the goal that I have for them to grow to 100%? So what you need to do, and this is going to be disgusting to some of you, is read Jim Cramer's book. I don't believe in a lot of what Jim Cramer does, and I know there's that saying that do exactly opposite of what Jim Cramer does. I don't want you to buy the stocks he suggests. What I want you to do is have an understanding of how the stock market works and how companies work and what the sectors are you never want to buy in. Because what it comes down to, if you're buying a company, you want a company that has control over its destiny. Okay? And what do I mean by that? Well, if they rely on the government to approve their products for sale, pharmaceutical industry, then they don't have control of their business. They can have a wonderful drug, but if the Food and Drug Administration doesn't okay it, they don't have anything. Then even if the Food and Drug Administration okays it, then the insurance company has to okay. So you don't want to be there. You just don't want to be in it. You don't want to own car companies. I don't care how many Ford F-150s Ford makes. They don't make any money. I mean, they may, their operating margins may be 3%. Well, inflation's been 6%, so that means they're only losing 3% a year. You don't want to own those. And Jim goes in and explains this better than I can in this video. And you can read that book and come away. Then once you read that book, if you're a beginning investor, come join our tribe. It costs you $60 a month. Hell, you spend that much on coffee at Starbucks. You waste that. You piss away $60. Invest in yourself. And if you can learn what a growth company looks like, you can double your money. Now, as I said, we're doubling right now every 6 months. Look at this. If you have $10,000 to invest in January of 2026, and you double it every 6 months, as we have done the past 6 months, in July of 2033, you'll have $327,000 million, that's right, $680,000. That's off of that one investment, 10,000. I'm not saying you got to add another 10,000 every year or every month or no. That's the power of compounding. Can I guarantee you'll achieve that? No. But maybe you'll only achieve half of it. And I'm sorry, you'll only have $60 million in July of 2033. This is if you can learn what a growth company looks like. If you can learn that they create a tell. You can see the growth of their revenues. You can see the growth of their earnings. You can see the growth of their operating margins, and that is a winner. It's not guesswork. It's just simple math that you learn how to interpret. And that's what this tribe is all about. Learning how to make money. There's only 4 ways to get wealthy in this world. And that is become an entrepreneur and create a company that provides goods or services that the world wants, and you'll become a billionaire. Number 2 is invest in entrepreneurs. Small companies, large companies who make a product or a service that the world wants, and they're profitable. The 3rd way is at the altar. You marry some rich guy or girl who has a rich dad or grandfather, and you inherit it. And then or you access it. And because the 4th way is at the funeral home. Somebody's wealthy in your family, and when they die, they leave it to you. That's the only 4 ways. Otherwise, you're selling your time. This is buying in growth companies as a result of the knowledge that you and I acquire through AI. The world is changing. It is your opportunity. You can either take it or you can just keep drinking coffee every morning at Starbucks. The choice is yours, and it's simple.